Welcome back, everybody. Today we're talking about what some people are calling every company's digital gold. And no, I'm not talking about Bitcoin, but data in a company that I just added to my portfolio a couple of weeks ago that's trading at a whopping 200 plus price to earnings. So while all the value investors out there just threw up a little bit in their mouth, some of you will be excited to know that the company that I added to my portfolio is Snowflake. So in this video, I'm going to explain to you what I saw in my analysis, what I liked and what I didn't like, and what I thought was interesting enough to add it to my portfolio in spite of its current valuation. So let's go ahead and get started. Now, first off, what does Snowflake actually do? Now, Snowflake's a cloud data platform that aims to help organizations store, manage, and analyze their data all in one place. Now, I know that sounds like a commercial, so let's actually walk through it. And this diagram here, I think, is a really good way to do it. This is their core platform kind of visualized, and you'll see as we talk about each of these layers, you'll kind of understand what their vision is for what they're trying to do. And the best way to think about this is from the inside out, which is how we'll talk about it as well. So let's go ahead and get started with interoperable storage. Now, this is basically your general data warehousing where you can have data maybe in a bunch of places and you're trying to get it all to one place so that you can actually use it, whether that's structured data or semi-structured or unstructured data. And then all around that data, they have what they're calling elastic compute. And while that sounds like a fancy name, what you'll see is it's a lot of the stuff you would expect in your basic data warehouse with things like business intelligence and reporting, data science, applications, and ETL. But one of the reasons why they call it elastic compute is because Snowflake's platform design separates the idea of storage and computing. And the best way for me to explain this is, in the quote, old way of doing it, you would have a bunch of data on a server somewhere. And if you wanted to use that data or query the data, then you go on the server and run your query. And you would have instances in these big companies where you have a person write a rogue query that was really bad and take down the whole database. Well, Snowflake's platform splits those out to where your compute layer can scale and be organized in different ways and helps protect against those type of things. Plus, it helps with cost because you actually pay for what you use and have the ability to scale up usage or scale down if you don't need it. So in general, elastic compute is some of those basic things you would expect from a data warehouse with some unique design features. And now around that layer, we have what they're calling Cortex AI, which I'm sure you have an idea of what that might be. Now, Cortex AI is Snowflake's managed service that allows you to use your data with built-in AI capabilities, where you can develop and scale AI models based on your own data without having to do all the AI infrastructure yourself. And then around that layer, they have what they're calling cloud services. Now, cloud services is another kind of fully managed service layer where Snowflake is trying to help you with things like governance, security, privacy, and compliance across all of your data in a managed way. And then lastly, they have the SnowGrid layer, which is a global connectivity and collaboration layer that allows you to manage data in different Snowflake regions as one unified resource. But outside of their core data platform, they also have the data marketplace, where basically data providers provide free and paid access to their own data within the Snowflake ecosystem. And it's basically a live data sharing marketplace where you can share or even monetize your data if you want to. So instead of creating one-off data sharing pipelines, it's all handled within the Snowflake platform. And just to be clear, I'm talking about this at a very high level. I mean, there's an infinite number of details and features that make this interesting, like their Snowpark developer toolkit and environments, their data clean rooms that help preserve privacy while collaborating, and their Snowflake notebooks for developing machine learning models and workflows, plus a bunch of other stuff. So clearly you kind of see what they're going for here, a one-stop shop for anything that your company needs related to data with the idea that you want a more managed service type of experience, where Snowflake would handle the bulk of the maintenance and setup and support. So that's the trade-off between what they've built and what other competitors provide. And the best example I can give for this is the difference between like an iPhone and Android. Like an Android technically allows you to do more things and customize more things, but it's also a little bit more technical to manage, whereas iPhone users in general don't really care that they're constrained because they like being within the ecosystem and everything just seems to work for them. And that's kind of how I see Snowflake's platform and who they're trying to reach compared to others. So if we just take a look at their general business slide, now we've talked about what they do at a high level already, their cloud-native data warehousing and analytics platform, and their customers are basically organizations of all sizes, from large enterprises down to startups. Now, in terms of total addressable market, they play primarily in these three areas: data warehousing, AI and machine learning, and data sharing. Now, anytime we talk about total addressable market, again, it's more of kind of an estimate, a guide of what we think it is. But the main thing to take away from this is that between data warehousing, AI and machine learning, and data sharing, this total addressable market continues to grow, which is a very positive thing for Snowflake. And then in terms of how they're different, they're cloud agnostic, meaning you don't have to be tied to one specific cloud provider to use their platform, which in my opinion is a big plus. Also, the separation between compute and storage, which we talked about, and their overall ecosystem plus data sharing marketplace. Okay, so let's talk about market position now, because according to the internet, Snowflake is actually the market leader as it relates to data warehousing with about 20 to 21% market share. And their top competitors being Amazon, Google, SAP, and Oracle. Now, just to be clear, these estimates are specific to data warehousing, which actually makes a difference, and we'll talk about that here in a minute. So let's go ahead and take a look at how they make money. Now, in terms of revenue growth, you can see that they've done a little under $3.5 billion over the last 12 months, and their revenue growth rate has been really strong at over 30%. But obviously, the negative profitability trend is something that's going to stand out, and we'll talk about that here too. Now, in terms of their business segment, Snowflake pretty much just uses product revenue, which is the usage cost around their whole ecosystem and their whole platform. And so, that is obviously the bulk of their revenue growth. But what's most important to see here is that product revenue is still growing at about 29% year over year. And then if we break it down by geography, we can see that the US is by far the biggest segment in the list, but every segment is growing at a good clip, with the US actually being the slowest at around 26%, but everything else above 30 and even above 40. If we just take a look at the growth trend here in Notebook LM, you can see about a year ago it was mid-30s, and it's come down a bit to about 29%. So it's definitely slowing, but to me, it's still strong growth. And here's where being positively impacted by secular trends really helps a business. You have things like data warehousing, business intelligence, and analytics that are still growing at double-digit rates. And now you add on things like AI, machine learning, which are growing even faster. And what it does is just bode well for Snowflake's continued growth rate going forward. But obviously, the competition in these areas is going to be tough, and it's primarily from the cloud service providers, Amazon, Microsoft, and Google, because they have their own data solutions that come with their cloud services. So companies that are already using their cloud products may just want to get the benefit of an integrated data solution. But the differentiator here for Snowflake is that they're cloud agnostic. You're going to have a lot of companies that don't want to be tied to one particular provider as it relates to cloud and data both. And especially once you get your data in a place where it's organized, it's moved, and you can actually use it, that's something that's pretty painful to have to move again. And now, Databricks is another competitor that a lot of people talk about, and they're more known for their capabilities in machine learning, data lakes, and more advanced data workflows. And part of the challenge here is that those are the spaces that are growing the fastest. But the reason I think Snowflake is still going to excel in spite of that is because they have a market-leading data warehousing platform. And that's where a lot of companies are simply going to start, just trying to get their data organized in a way that they can actually use it. And then when they're ready to do the more advanced things, they're going to have a strong incentive to use the provider that's already there, and that's Snowflake. Now, obviously, you're going to have some companies that will seek out Databricks specifically because of the things that they're better at. But remember the iPhone versus Android example. I think there are companies out there that prefer a Snowflake-type ecosystem, and those are like the people who prefer an iPhone to an Android phone, because ultimately they want a more managed service that just kind of works out the box, and they don't want to deal with having to customize everything, having to tune everything, and having to maintain everything. And I actually think there's more companies who want that than the opposite. And another company that I don't even have listed here, but I know people will ask about, is Palantir. Now, I've already said that I'm not an expert in what Palantir does. It's something that I'm digging into now. But my understanding of how they're different is that Palantir focuses on creating very bespoke, personalized solutions for their customers that involve bringing disparate data together and being able to operationalize it for mission-critical type of tasks and activities. Whereas Snowflake is more about a general data platform and ecosystem that companies bring their data to so they can leverage a suite of common features and capabilities. And you can see this even in how they bill and make their money. Snowflake is based on usage, while Palantir is mostly specific contracts for specific things. So while Palantir and Databricks are both great and very interesting companies, I think Snowflake appeals to a different type of customer, and they do it very well. But okay, let's talk about some risks and opportunities. So top risks I have for Snowflake is, one, the strength in capital of their competition. Now, this is a company that's going up against Amazon, Google, Microsoft, Databricks, Palantir. I mean, these are well-funded, very strong companies, and so competition will be fierce. Next, I have the pace of change and innovation. At the end of the day, this space is changing very rapidly, so market advantages and all that can also change rapidly. And then lastly, they actually depend on the cloud provider. So it's one of those unique situations where their biggest competitors are Amazon and Google and Microsoft, and yet they depend on Amazon and Google and Microsoft to be their own cloud provider. So it's kind of a unique situation. Now, in terms of top opportunities that I see for them, their innovative platform and pricing model obviously is unique. Their data marketplace and overall ecosystem, to me, that's a very interesting part of this. And then lastly, as AI and data needs continue to grow, getting that increased depth of relationships with their customers with their new suite of products. So in terms of questions to think about for investors, and they kind of touch on the same points here, but is Snowflake going to be able to compete with the cloud providers who have a ton of capital while still being dependent on them for infrastructure? It's a huge question that needs to play out. Will they be able to leverage their market advantages like their platform and managed service focus to be able to increase their depth of customer relationships as AI and machine learning becomes a bigger part of the pie? And then lastly, can their data marketplace become the primary live data sharing ecosystem that actually extends their market advantage? All right, so we have a pretty good idea of what their business is all about. So let's take a look at how the stock has performed. Now, Snowflake is currently trading at about $177.89. And over the past year, they're actually down 18% or close to 18%. Now, in terms of their most recent earnings, it was all the way back in November, but they beat on revenue and earnings per share both. And Snowflake is one of those that's actually going to be reporting earnings this week on Wednesday, the same day as NVIDIA. All right, so we've talked about the business. Let's touch on operations. Now, we talked about their most recent quarter, which was back in November. They exceeded both revenue and operating margin guidance for that quarter. And for next quarter, they basically guided for between 906 to 911 million for revenue and operating margin of 4%. Now, in terms of their results versus their guidance, you can see that they've exceeded their guidance basically every quarter for the past 2 years or so. And what that tells me really is two things. One, that their growth is good. They're in a very high growth area. But two, it probably means that they're a little bit conservative with their guidance to where they're always exceeding it, which, I guess is not really a bad thing. Now, if we go to the capital allocation slide, this is not really going to be a pretty slide. You can see ROIC is negative by a lot, so that's not pretty. Shareholder yield's also negative. Their debt situation's actually pretty good. They have zero net debt. Basically, cash on hand is higher than their debt. Their debt to equity is 90%, which, is okay. Their net debt to EBITDA is 2, which again is fine. They did do buybacks over the last trailing 12 months, $2.4 billion in buybacks. They actually increased some debt to do buybacks, which, I don't normally love that, but especially if you're looking at buybacks in terms of value, right? Like the multiples that they're trading at, people will be like, oh, that's not good. But, part of it is to kind of offset what they do with stock-based compensation, which is really high, which people will look at and, probably cringe at. But kind of like how we talked about with Cloudflare, if you're buying Snowflake at this point, you're not buying it because of this slide. This is just one of those things that you'll have to live with and understand the risks of if you believe in the other parts of their story. Now, if we just look at profitability real quick, their gross profit margin is good and has been improving. Their net profit margin is not, they're not GAAP profitable, so that's negative, but it's trending in the right direction at least. And their free cash flow margin is looking pretty good and improving as well. So when we talk about this company and we talk about operations, right, it's going to be a mixed bag. Their, net debt situation's okay. They're aggressively investing for the future. And so when you look at things like ROIC and you look at things like even, net margin, all that, it's not going to look good, right? Like that's not why you buy a company like Snowflake at this part of its business life cycle. And it's one of those things where it's common with these high growth tech companies. We talked about it again with Cloudflare, and it's one of the reasons why a lot of people saw that video and said, ew, why would you buy this company? But again, these are companies that are high growth tech companies, and this is kind of just what it looks like at this stage. And you have to understand that that's the risk you're taking if you're interested in investing in them. All right, so if we take a look at the valuation real quick, again, this isn't going to be a pretty slide. Their price to cash flow to growth numbers are really high. If we just take a look at their price to cash flow, it's above 70. So again, this is a stock that you're not buying based on a good valuation, right? This is a different type of story. It's a different type of investment. So in terms of how I would rate Snowflake in my 3-tier rating, from a business perspective, they're the market leader in data warehousing. They have a very large total addressable market and continues to grow. They have an innovative platform that focuses on managed service, where it's a differentiator, and they have the potential of the data marketplace, becoming the primary ecosystem for live data sharing. So overall, from a business perspective, I would rate them as good. Now, in terms of operations, they have zero net debt, they have high gross margins, but they do have negative operating margins, negative ROIC, and very high stock-based compensation. So from an operations perspective, I would rate them as just okay. Now, in terms of valuation, their price to cash flow to growth is above 2, and their price to cash flow is above 70, so there's no other thing to rate them other than poor. So again, this isn't some super fundamentally focused investment. I mean, this is a high growth tech company, very similar to what I did with Cloudflare, and you just have to understand that that's the type of risk and type of stock that it is. Snowflake's a high growth tech company that's a market leader in data warehousing. They continue to build out the breadth of their platform with the idea that as data needs continue to grow with AI, their customer base and depth of customer relationships will grow as well. And personally, I think that they will, and that's why I added them. So to quickly recap the story on Snowflake, they're the data warehouse market leader, cloud agnostic, cloud native, storage and compute being a very interesting part of that. They focus on ease of use or managed service type of experience. They have operational opportunities that need to get better with extreme competition from the hyperscalers, and AI trends present both a big opportunity but also a risk. Then in terms of what I'm monitoring for Snowflake going forward, obviously overall revenue growth, data warehousing market share, is it growing? Is it shrinking? GAAP versus non-GAAP profitability, I think that's going to be a story that'll be interesting to see unfold. Stock-based compensation versus cash flow. Now, in general, that's not something I'm going to overly worry about or, stress about. Just over time, I want to see it improve. And then in terms of some details of the business, net revenue retention will help tell us if that depth of customer relationship is improving. Marketplace listings in terms of activity in that marketplace ecosystem. And then lastly, Snowpark usage, which is one of those things that I want to see that continue to grow and increase the way that it has been, because it means that their customers are using their machine learning and AI capabilities. So again, for folks who look at valuation as a primary criteria, this stock isn't going to make a lot of sense. But for me, I don't look at valuation as a primary criteria. It's a secondary criteria for me. And Snowflake is simply a company that's smack dab in the middle of strong secular trends that continues to grab market share at a rate faster than their overall growth of the industry they're in. So I added it to my portfolio at 86 shares at $186.92 a share. So obviously it's come down a little bit since I bought already, which is okay because this isn't a short-term idea for me. But it's at around 4% of my total portfolio size, and we'll just see where it goes. So what do y'all think about Snowflake? Let me know down in the comments below. Now, if you missed my live stream where I answered viewer questions, you can watch the recap by clicking this video right here. Hope you guys have a great day out there. Financial independence is true freedom. So keep building and stacking wins, and I'll see you on the next one. Peace.